Hey there, amplifiers. Thanks for tuning in today. We're going to be talking about some actions that you can take, some paradigms that you could begin shifting so that you can maximize your cash flow while reducing stress. Because is is it fun to have not good cash flow? No, it's not. Um, if you're tuning in now, make sure that you subscribe at growthamplifiers.com. We're on several different podcast distribution channels all over the place, and we'd like to have you tune in and subscribe. We'd also like you to tune in and take actions. So if you're hearing things that are resonating with you, share your comments, give your likes, give your thumbs up. We'd love to hear that. Our guests love to see it as well. Also, feel free to ask questions. If you're catching this on a replay, we do come back and look at our questions periodically, and we try to get those questions answered. So if you do have a question and you're thinking, hey, you know what? I'd like some more insight there. Please be proactive, ask questions, and take action. At the end of the day, you're going to gain information to take new actions. New actions lead to new results. So that's what we're here for. So let's make it happen. Now, the big idea that we know, cash flow is critical. We need to have good cash flow. It is critical for business. And without healthy cash flow, well, we could have high stress. That's no good. We could have lower business value. That's no good either. Or it could be game over. And that's really not good, especially if you're trying to run a business. So we got to pay attention to cash flow. It is the life and blood of a business, and it deserves your focus and attention. So glad you're tuning in, spending a little bit of time to learn about some things you can do to elevate your cash flow. Our guest today, Catherine Tyndall, is a CPA. She is a CPA and partner of Dominion Enterprise Services, which is a concierge for tax advisory. And she is an expert on tax resolution. And also she provides compliance for entrepreneurs. So I'd like to welcome to Growth Amplifiers, Catherine Tyndall.
Thank you so much, Kenny. It's really great to be here.
It's great to have you here. It's great to be celebrating. We're in the week of Thanksgiving. And so we have a lot to be thankful for.
Yes. I think for me, the one thing I'm probably most thankful for recently is tax reform isn't on us yet. So I can enjoy my Thanksgiving without having to read some long legislation. So I'm okay with that.
And you know, I know you're joking, but you're also very serious at the same time, because there is a lot of changes coming down the pipeline. And it's going to be really hard for the everyday person to even have a clue of what to do. So I'm glad we have professionals like yourself who are studying, who are keeping track of that for us, so that we can make sure that we're doing the right things. Now, I know that every CPA is not created equal. And what I like about your approach is that you're proactive. So would you mind sharing us a little bit about what inspired you to get and to become a CPA in the first place?
Well, I think for me, what inspired me to join the profession is originally I wanted to be in medicine. And my parents are actually both CPAs and had their own tax practice. And kind of on a whim, they told me, use one of your electives, take an accounting course. And, as you can tell where that ended up. But I found, a combination of, I find it's, and I'm sure your listeners find the same thing, that when you have a line of work where you really do create value for other people, that you serve other people, that you're bringing goodness to their life, that's really satisfying in a way that just doing something mindless is not. So that's kind of how I got into the profession. And I really enjoy the nature of taxation, because to me it's like I get paid to do Sudoku all day. So it's really fun for me. But
I had a very similar experience on my journey to become the marketing advisor and growth coach that I am today. When I started off, I was doing website design, and I liked the puzzle of putting things together and making something work.
Yep.
And I know with numbers, there's a mess of numbers. People have all this stuff going on in their business, but if they don't know how to organize it, and don't know their options of how they can improve their cash flow or save more in taxes, then they're going to be limited on what's possible for them.
Yeah, for sure. And I think a lot of people, especially entrepreneurs who've gotten through kind of that first leg of growth on their own and they're more established, really, you've done everything that you can to improve your revenues, to drive sales, increase conversion rates. You've done as much as you can to increase that top line number. And then on the other side, having a good business model so you're able to do high margin and decrease your expenses. That's a lot that you can control yourself, right? You can control those factors that are going to seriously impact your cash flow. But I
Hmm.
think for a lot of people, it's kind of after the fact is when they start to think about tax because you're not having to deal with it in the day to day of your business. And it's not something that you can usually, once you have a pretty serious operation, that you can handle yourself because it
Hmm.
just is really complex. And so because it feels like it's out of your hands, I think for a lot of people that come to me, like they're just kind of resigned to, okay, tax is just going to wipe out 20 to 50% of my work. And there's just not much I can do about it. But so I think the kind of mindset shift that I try to preach is no, there are things that you can do about it. And that's kind of a hidden area where you can do certain activities and really dramatically increase your cash flow from your business by modifying things around taxation.
So you can be proactive and actually change the outcome. So let's start unpacking this, and starting off, just we hear the term cash flow, and some people get the idea, yeah, it's cash flowing. But why is it so critical for a business to pay attention to this and be proactive when it comes to their cash flow?
I think a lot of people, and especially people early on in their business, get really obsessive over profit, which is
Hmm.
good. That's a good number to be sensitive to. But what you make in profit is how you're getting taxed because the US system, it's an income tax basis and it's usually calculated off of that profit number. And so for a lot of people, if you're trying to drive really high profit, top of the line profit, you're going to be paying high taxes. And so you still want to have that kind of profit built into what you're doing, but being sensitive to, are there ways that I can, and it depends on what your goals are, right? So if you're going to be
Hmm.
selling your business, you don't want to have it not showing a profit, but, are there ways that you can tinker with that top line number to show something of like a paper loss and yet still get cash flow so that you can keep going? So that's something I often see with like real estate investors where
Hmm.
they're throwing off paper losses through using depreciation. And yet, when you really think about it outside of an accounting context, they're being profitable because their properties are appreciating and they're getting cash flow without paying tax on it, if you can structure it correctly. And so that ends up being a much better scenario oftentimes than just kicking off high profits and then losing, 20 to 50% in income tax on that. And, that's cutting out 20 to 50% of the cash flow from your business, right? Because you can't really finance your taxes. So,
Right. So as I'm hearing about it and thinking about some of the bigger companies who are more sophisticated,
mhm.
um, they work with people to figure out how they could save more of the money they make and
Yeah,
maximize their
exactly.
dollar. And for a lot of small businesses, they haven't necessarily taken the time to do that. I think the trap one can easily fall into is, yeah, I've taken my taxes get done by um, H&R Block or something, and they'll file the taxes for me, and yeah, I did my taxes, but
Mhm.
and maybe I even wrote some things off. But what you're talking about is even a deeper level and more
Mhm.
strategic strategy. Is that a thing? More of a strategic approach towards thinking about how you can maximize your bottom line beyond the common write-offs, right?
Mhm.
So um, that's really powerful. What is? Can you give me a kind of distinguish what an example might be that someone can get an idea and say, oh, maybe I'm not doing that, or
Yeah. So a common one that I find is people don't think about kind of the overall tax exposure that they have, if they have a family that they're very close with.
Mhm.
And so like an often tactic that I'll talk to people about is, hey, and this is a really small one that applies to a lot of people. Hey, could your kids work in your business? Is there anything that you could have your kids do in your business? Because, if they're, they're young enough, you're eligible for being able to pay them and not have to pay payroll tax on those wages. And it shifts those wages from your high brackets to, if it's under $12,000, it's zero bracket. So it ends up being tax-free money. And then the even more powerful thing on top of that is if they don't need those funds for other things, because your child now has earned income, they can contribute to things like a Roth account. So now you're taking money that was never taxed on your return, and then you're putting it into a Roth, and now it's going to grow tax-free over the course of your kid's life. And the nice thing with those is if they want to take it out in like 5 to 10 years to buy a house or to do something, they're going to have this they're going to have this cash sitting there waiting for them that's going to be tax-free when they want to take it out, that just never got taxed. And, so you can imagine the profound impact of that. If you say you have a kid where they sit on it for the course of their life and then they take it out at retirement, you're looking at several $1,000,000, if you can do this strategy for years where it's tax-free money. And so that's one technique that I always have in my mind. That's one that, applies to a lot of people that they just don't know about. They just don't think about it because, if you see your tax as something that it's just, you kind of deal with it at the end of the year, you get it done with, it's annoying and, you hate it. You miss out on a lot of these things where if you just modified your behaviors a little bit and knew how the rules worked, you can take advantage of some of these really powerful techniques.
That is killer. And I want you to think about this. If you're a business owner, entrepreneur tuning in with children, consider what Catherine just said. Consider that you right now could be paying taxes on money which you could be using to set aside for your kids tax-free, and have them work for you. Have your kids work for you, doing something. I'm sure it doesn't have to be a complicated something, but having them doing something, contributing to your business, giving them some responsibility, also helping you out and helping them out as well. It's like a trifecta of wins.
Mm-hmm. Yep.
Wins are all over the place. So that's a really powerful strategy. What are some of the common mistakes to avoid when it comes to cash flow, tax planning, things of that nature? We're all human. we're all easy to make mistakes. Sometimes we think we know what we're doing, and we may be just doing great in one area and shooting our foot in the other. We're not even aware of it.
So I think for most people, the first mistake I see is not being proactive about it, right? Mm-hmm. So not addressing it before the end of the year, or just not addressing it. So like I had someone that I was talking to the other day where he was running he's an architect with a big architecture firm, and he was talking about how he had bonused himself out in his company like over $1 million, and almost a big chunk of that got wiped out to tax. And so it wasn't until the year after, now he's starting to try to find answers for that. And so I think the first mistake is just to wait too long, and to realize that if you're working with a tax professional, it's worth it to talk to them during the year and ask them for more work than just filing the tax return, and ask for, a planning engagement. Like, is there anything that we could do here to save me more? I think the second mistake that I see a lot of people make is they try to DIY it when it comes to trying to execute some of these techniques themselves. And it's very easy to miss a step or mess it up, and it just kind of will wipe out the whole thing. So I had another case recently of a real estate investor who had come to us, and he had set up a 1031 exchange. And if you're not familiar with the 1031 exchange, any listeners out there, it's basically a specialty tax technique where you've purchased a property that you were using and you're renting it. You're able to sell that property, buy a replacement property, and not pay capital gains tax. But you have to follow some pretty specific steps in order to get it to work. And so he had done a lot of the steps himself. He thought he was going to get it to work, and then he didn't do it correctly. And so by the time he talked to me, he didn't qualify for the treatment. So he was looking at like over $200,000 in taxes that if he had just worked with somebody, we could have just deferred it, for decades. Because the nice thing with those is you can just keep rolling them forward every time you go to sell a property. And so you can imagine over the course of his life, a $200,000 tax hit now, what the lost appreciation on that money is going to be over the course of a life. So I think trying to DIY it for too long, like it's, as you said, when we were talking before the show started, really seeking to sharpen the saw
Mm-hmm.
involves getting people who know what they're doing to handle things that are complicated so that it's just done correctly and you're not trying to teach yourself the tax code. So,
So I think that's a great piece of advice, and I'm going to double down on it because I give the same advice. And have you ever seen like a Pinterest fail of like Cookie Monster? Have you ever seen that?
I've seen some pretty good
Like,
Pinterest fails. Yeah.
well, the thing is, people see something and they say, "Oh, yeah, I could do that," and then they miss important steps, and
Hmm.
then what they get looks nothing like what they were intending to do. And sometimes these steps look like so basic that I'm looking to bake bread. What is this yeast ingredient? It only costs for half a teaspoon. I don't know if I need it, so maybe I'm not going to worry about it. I'll just substitute nutmeg or something. And then, of course, it's not going to turn out the same. So I think it's really critical to connect with a trusted guide that knows the details,
Hmm.
and they can help you actually uh, save time and get a better outcome. Usually, they more than pay for themselves,
Exactly.
and that I guess the challenge we have is it takes a little bit of humility and could be a little painful to get started there. However, there's the pain of discipline and the pain of regret.
Hmm.
So just if you're like most people thinking, you may have heard about, it's probably better to save for retirement sooner rather than later. But a majority of people don't get it done early; they get it done later. So, point of the story is, don't procrastinate. Connect with someone sooner rather than waiting and then finding out after the fact. Yeah, I should have done that.
Yeah, because I think for most serious entrepreneurs, your CPA is just going to be one of the key relationships as part of how you run your business, right? It's your CPA, it's your business attorney, it's your banker, it's your insurance guy. Like it's one of those key relationships that, as you get more complicated, you're just not going to be able to handle it. And so I like to your point with they usually pay for themselves. Like it's a point of principle in our firm that we only work with clients that they're going to get at least a 200% ROI on what we do.
Hmm.
And that they're able to know that up front so that, that you can make a decision, right? Because I think a lot of people, they get stuck in the mentality of thinking everything's an expense. And if you can shift your mindset into, no, everything I'm doing should be an investment, right? If I'm incurring an expense, it really should be producing an ROI for me somewhere. Either it's an emotional ROI or it's a direct financial ROI. And if something's just a consumption thing that you're doing, whether it's like an advisor or a service that you have, and it's not producing an ROI, you shouldn't be doing that, right?
Hmm.
So I think that's a key thing. Like how I changed the structure of our firm was that I wanted to be able to communicate that really directly with clients that the work with us, it's an investment and it should be a profit center for you. And I think every company that an entrepreneur works with, you should be able to frame it in your mind like that. Like, is this producing a good ROI? It's important.
I'm totally on board with that one. It's a lot of people can get caught up in the cost. They pay for things and it's cost.
Hmm.
And if you can end up saving money, more money than you're spending, or making money back more than you're spending, then you have a return. And if you think about it logically, then you're actually losing money by not taking that
Hmm.
action.
Yep.
So just make sure that you really evaluate those offers. And when you have someone who has the knowledge and expertise, can save you time, can guide you through a process, and they have some credibility behind them, why not take a moment to engage and learn about that?
Hmm.
So speaking of which, what would be the first steps for someone to take that maybe hasn't gone through that engagement yet? They're hearing about it and they're thinking maybe that's something I should do, but is my business big enough? Would my business really benefit from this? Um, which steps should they take to start helping them gain the awareness of what they should be doing?
Yeah, so I would say for most entrepreneurs out there, if you're doing more than $100,000 in profit, you should be engaging a tax professional. And I would say for the added cost, it's worth it to work with a like an actual CPA firm or an EA who has a tax advisory practice,
Hmm.
outside of like an H&R Block or like a TurboTax, just
Hmm.
because you want somebody who is going to have a more vested interest in you and your in a relationship with you. Because a lot of the times, a lot of the planning techniques and things that we do in our practice, it comes from really knowing the clients well and knowing what's going on with them, right? So for me to give the advice to somebody to hire their kids, I already know, the ages of their kids, what's going on with the kids, and what kind of business the client has, that's actually going to be applicable and something we could pull off. And
Hmm.
then on the technical side of it, that they're in the right entity, that they're going to get the benefit from it, and how to run the payroll and all that kind of technical stuff to execute. But so I think the first step to start with is really evaluating where you are with that relationship. If you're going for a self-serve option, I would consider shifting to someone who's not going to be a self-serve option for you, that it's going to be a relationship. And
Hmm.
how you find that relationship, if you already have a tax professional that you're happy with, I'd say the next step to that would be asking for a planning engagement from them, because most accountants are not salespeople. And so when you come to them, they're going to meet the minimum requirement, which is making sure you're compliant with your filing obligation, which is filing your taxes and like remitting payment to the government. So they're going to
Hmm.
make sure that you're good on that. They don't want you going to jail. They don't want you getting IRS notices. But unless you ask for more, most of the time you're not going to get more, because that's just not, I've been in the industry a while. That's just not the mentality that most tax professionals have. So yeah.
And they may not be in the mindset to even be proactive looking forward. They may not have those
Yeah.
skills. You may have someone that's doing a really good job at what they do, but they just may not have the capabilities of being able to provide the value that you could have by getting a second opinion.
Yeah, true. And that's what I usually say to anyone who approaches me that's interested with having us look at their situation is, more often than not, or somewhat frequently, when I see someone's tax information, I can tell them, "Oh, you know what? Actually, you're tax optimized. Like, your previous CPA has you set up correctly. So you should continue to just work with them, because I can see what they're doing, and they're taking advantage of what you're eligible for." But it's always, almost every professional in professional services is willing to do a free consultation. And so to really take people up on that, and make sure you've got a good personality fit, but also a good professional fit, right? So if you go to your accountant and are like, "Hey, can we do some planning work? And, could you tell me about what I could expect for an ROI on that?" If they're able to communicate that well to you, then that's, probably the kind of professional you're going to want to work with.
I like it. I like it a lot. So, speaking of which, Catherine uh, and her company mentions they do have a complimentary consultation, and you can go to their website, dominiones.com. If you go to the contact page, there's a great form on there that will help get you signed up so that you can experience that for yourself. So, if you haven't worked with a tax planner, you haven't had that someone take a look at your business from that level before, I suggest just getting it checked out. It
Mhm.
doesn't hurt to get some ideas. Now, what I really liked about what you just said a moment ago is, if someone's doing good already, you'll just basically affirm, "Hey, you're doing good." You've
Mhm.
you've got things set up, and that's really refreshing. That's my approach, how I work as well. When I'm reviewing someone's business, if they look like they've got everything together, then I'll give that thumbs up. If there's
Mhm.
some areas that could use some improvement, I'll just highlight, "Hey, there's some things you might want to consider." And if you need help with implementation, let's have that conversation. So if you haven't done so already, I suggest taking advantage of that. All you can do is learn something to help you benefit yourself, your business, and your future, it couldn't hurt you. So, as we're kind of wrapping up, um, what is something that you've gained on your entrepreneurial journey that you think might be beneficial for others who are on their entrepreneurial journey? It could be something tax related. It could be something completely different, just something that you've learned and you found valuable that you're like, this is something I could share.
Mm. I think for me, probably the most valuable thing that I've learned in my entrepreneurial journey is when I started working at other CPA firms and kind of seeing how things were done and the standards in the industry and everything. And so for me, when I launched this firm, I really took the time before going into it to say, where are the broken parts of the model of this and where can we fix this? Where are the friction points that clients experience? Um, you know, how could we make this smarter? So really dissecting the technical knowledge that I have as part of a greater business into how can we make this model more efficient for our staff, for us, for our clients, and having that in mind before we started doing everything. And so I think for a lot of people, they get into, especially with like very technical kind of work like I do, or, if you're a plumber or if you're, running an online business or something, you kind of just do you just start working, you start getting into it, you just keep going. And to take a step back and say, let me actually plot out what the model is of how this works, the model of where are we providing value, where are we getting traction for our clients, and how do we really emphasize that? Because that's ultimately what's important. And so how do we structure the business around that value that we provide? Because that's ultimately what's going to drive the most success for our clients and for us. And so not getting caught in the weeds of all the little things, but saying, okay, how can we really mold what we're doing around our value? And so I've found that mental exercise before we started doing a lot of things was extremely helpful for me, because my industry is very traditional, I would
Mm-hmm.
say. And so to just really kind of model what other companies in different industries are doing onto my industry, I think was a really helpful exercise for us.
That is great insights. Those small, subtle differences can make a huge impact on the experience that you provide, which all comes back around. So it's worth taking the time to step back, look, evaluate. And if you can't do everything, start with one thing.
Mm-hmm.
So,
Mm-hmm.
Catherine, thank you so much for being on Growth Amplifiers, for taking some time to share your knowledge and expertise, giving people paradigm shifts. Again, highly recommend reaching out to Catherine and her team. At the very least, connect with the person that you're working with now, get some perspective, you take new actions and just see what's possible.
Mm-hmm.
And until then, let's have an amazing and wonderful Thanksgiving holiday weekend coming up around the corner. If you're tuning in this and you're like, it's not Thanksgiving anymore, you can still be thankful this week for something. Let's remember to be thankful always for the awesome things that we have in our lives.
Mm-hmm.
Thank you again for showing up, and we'll catch you around the campfire.
Thank you so much, Kenny. It was such a pleasure to be here.